Welcome to this episode of ACG's Growth TV. I'm Carolyn Vallejo, digital editor for ACG's Media Group. Technology remains at the center of business transformation across virtually every industry today. Here with me to discuss this topic is Tricia Salinero, Managing Director and Head of Technology within Investment Banking at Stout. Tricia, can you talk a little bit about what valuations are looking like in certain subsectors of technology companies?
Sure. So technology valuations have taken quite a roller coaster ride here over the last certainly 18 months. 2021 in particular, we saw a runaway of technology transactions and valuations. I think at one point, public company Bill.com was trading at 50 times revenue. Now, since the end of last year, we're pretty much looking at the public market valuations. Took a little hit. They're probably down 30% off their highs. Certainly companies in the software sector are continuing to trade aggressively high. But what we're seeing is, companies are coming again from those industries and really driving technology transactions in those vertical subsectors. So I'll take AgTech for an example. Over the course of 2020, there was moderate investment. Companies were, continuing to get funded. There were exits. Those exits really weren't that spectacular from a technology perspective. They were probably 2 to 3 times revenue. As we got into 2021, you saw an incredible acceleration of deals that were happening and investment going into the sector. So in Q3, probably $2 billion worth of investment went into AgTech. In Q4, that almost doubled to close to $4 billion worth of investment into AgTech. And it is bifurcated, though, around things that are very traditional and maybe not as technology oriented, all the way up through machine learning for fields. Trying to understand a company like John Deere coming in and buying 3 technology companies. That really speaks to this digital transformation, and it speaks to how they're really trying to update their industry. So they bought a company that was doing analytical support for golf courses, a pretty mundane thing, but actually has some feedback into their own traditional industry. You saw another one called Harvest Profit, which was application software for tracking the costs, profits, grain yields, and things like that. And then a company called Bear Flag Robotics, which was self-driving for tractors. That makes a lot of sense, right? You saw another company, Raven Industries, that bought a company called SmartAg. Again, this driverless tractor technology. Those ones will be more aggressively priced. And you'll see, companies that, got up to, 10 times revenue, got up to 20 times revenue. And then, of course, there's the whole, industry around, what will we look at beyond beef and beyond meat, so to speak, in that ag tech area, as well as we start to think about, how to feed, billions of people. And so I think that the dollars going into ag tech in particular, I think we'll see their yield probably in the next 18 to 24 months, as we saw that flux of investment dollars. We're also going to see the M&A dollars come out in terms of exits, probably 24 months from now. So something to watch as we're looking at those valuations grow.
The ag tech space in particular has been very interesting. There's been a lot of development in that industry. Can you talk a little bit about the evolution of private equity's interest and participation within ag tech?
Ag tech is such an interesting space because, typically and historically, it was a very thin margin business. And what we've found here over the last 3 to 5 years is that the digital transformation around adding sensors into fields into the distribution and supply chain, running analytics on top of these different processes, have really given the opportunity for the margin expansion within these businesses. And that's really made them more of a target now for private equity. So you see someone like a John Deere, which we mentioned before, but you also see someone like a Generac. So, Generac in the, backup supply, backup power and supply space, buying a company like Tank Utility, is looking at the propane levels and tank monitoring space, adding that recurring revenue, adding software, adding analytics, all of those allow for that margin expansion. And it's really, falling to the bottom line in a way that makes these companies very much attractive to the private equity space in general.